Greetings, folks. This is DC Investing. I've reached financial independence and I am talking about topics to help others on their pathway to financial independence. Today, the topic I wanted to talk about was kind of a basic part of investing, but I've talked to a few people recently that didn't know how these basic things work. So today's kind of just a foundation type of a topic, just to teach new people who maybe aren't familiar with stock markets and how things work about some basics. And so the topic today is about dividends, just like what they are, how they work. Because I was kind of shocked when I found, even people who've been investing for quite some time don't really understand what a dividend is and how it works, how to find it, and how to use it. So basically, when you buy a stock in a brokerage account, you are buying a part of a company, a piece of it. And ETFs are really popular nowadays. And so if you have a S&P 500 fund like VOO or SPY or anything in your 401k plans, you own 500 individual companies, and each of those companies may or may not pay a dividend. And the ETF, they typically pass the dividend on to you as an owner of the ETF. So even something like VOO or SPY, or there's a lot of others out there, they will pay a dividend. And you may not realize it, but you are getting one. And so the way that I like to see for any individual stock or even an ETF, my favorite way to find out what that yield is to go to a site that's put on by a company called Investors Business Daily. I have on and off used their site and got the paper and other things for many years, but I just really like some of the ways they present information. And so the ticker, not the ticker, but the web address is investors.com. Again, that's investors.com. And I just like some of their tools, maybe because I've done it so much. I like their tools, but you can find them in various places. And so the page that I use to find dividends on their homepage, if you go down to the top movers, they usually have a list of, like 10 stocks or something that are moving the most that day. Just click on any one of those of the top movers, and a page will come up that will have a chart at the top of it. And then if you scroll down a little bit, it has a lot of really useful information that investors use. And one of those is a yield. It displays the PE and the market cap and a bunch of other terms that are useful. But today we're just talking about dividends. So the yield is basically the dividend. And so you can look up any ticker on that page at the top. You can enter in the ticker to an ETF or a stock, or I guess bonds, I think, show that as well. But then if you scroll down, you'll see a yield. And the yield is kind of the amount that stock will pay you every year for owning the stock. And you get the money because you get you're entitled to part of the earnings that the company has. So companies earn money, and they collect that money, and they do one of two things, well, one of three things with it. One, they buy other companies and they grow the business, so they reinvest in their own business, and thus you have a larger business that you own, and hopefully the share price goes up. Two, they could use the income to buy back their stock, and a lot of companies are buying back stock these days. Or three, they pass it on to their shareholders. And so the dividend is when a company passes on part of its earnings to the shareholders, and it gets paid to you in your brokerage account. So where you can typically find if a dividend has been paid is if you look at the history. If you own one of these, you can look up the history in your account and then kind of look back through, and it'll mark, hey, you got a dividend and you actually got paid money for owning this company. And the two things typically happen with that dividend. Either it goes into your core account and then you can use it to buy more shares, or you can reinvest the dividend and buy more shares. So I don't know how a generic account will come up if dividend investing, reinvesting is the default situation, or if you have to, or if it just goes into your core account. But by looking at the history, you can see that dividend when it comes into your account. So on the topic of yield, um, if you're looking for the dividend, you find the yield. It is not the same as if you had a bank account, so, or a CD or something from a bank. So if you go to a bank, they say we're going to pay you this amount of interest based on how many dollars you have in your account. So you're probably more familiar with the idea of interest. With a dividend, um, your yield is loosely tied to the price that you pay for the stock on the day that you buy it. And so stocks are not actually paying you a yield, they pay a very specific amount as a distribution. And so you can, and it's usually a number of so many cents or so many dollars per share that is owned. So if you own 1,000 shares and each of those shares pays out 10 cents, then I think the math that you get $100 a year for that dividend, and that's what 1% or something, or maybe that's 10%. I don't know. Do the math, but the stocks pay a very specific dollar amount or cent amount every year, and if you want to know, the easiest way to see that is to go look up dividend history for a particular stock. So on Google, just type in dividend history for whatever the ticker is that you're looking at. And usually Investopedia has some, or NASDAQ, I think, has some listings. But you can kind of look at the history of how much per share was paid for whatever company. And the dividends typically get paid once a quarter. And so each quarter you get a very specific payout amount per share. And so what you're really buying when you buy a stock is that payout. Could be like 10 cents a share, 50 cents per share, 91 cents per share, but it's very defined. And then depending on how much you paid for your shares, when you divide it by that amount per share, that gives you your yield. And the reason why I'm mentioning that is because even though the payout for a stock may stay the same, the yield will go up or down depending on if the share price goes up or down. So just an example, if a company paid out $1 per share and you bought that, the share price on the day that you bought it was $100 per share, then I think that's what, a 1% yield. Maybe it's a 10% yield. I can't remember. Let's say it's a 10% yield, and $100 per share. If the price of the shares drops, say it goes from $100 to $50, then the yield actually goes up because the amount that you pay per share goes down, but the payout stays the same. So that's something to kind of know is your share price can drop, but the amount that the company pays on the dividend is still the same. So if the share price drops before you buy it, then when you buy a stock, you actually get a better yield on the share prices. Once you buy the shares, the value of your stock can drop, but your dividend is going to be the same. So, if you bought $100,000 worth of a stock and they're paying you 7%, that would be like $7,000 a year. Whether the stock went up or down, you'd still get the same dividend. Um, so that's something to kind of know. And I guess if I'm not making sense here, you can always do a chat GPT search inquiry that says, hey chat GPT or Google, how does a dividend work? And it'll explain like how things go up or they go down. So like I was mentioning, if a share price, the cost you pay for shares may go up or they may go down, but the amount that the company pays out typically stays very steady. And executives try to keep the dividend payouts very stable and slowly increase them over time. So if you do an inquiry and say, search dividend history for some stock, you'll typically see that once a year, sometimes more than a year, the amount of cents that they pay out goes up slightly because executives are trying to increase the payout that they have in their stock. And so that's helpful to you as an investor because it keeps your payout ahead of inflation typically. And that's something that you really want, is you want your dividends to go up over time with inflation so that you can live off of them. Every once in a while, a company will get in trouble and they won't be able to keep a dividend up and they'll end up cutting the dividend slightly. But executives do not like to do that because typically they get a big share drop in the price if they ever cut a dividend. So it is not a good thing to be an executive of a company and cut your dividend. That's not a good thing. Highly frowned upon, but it does happen. So executives try to pay the same amount out in dividends and slightly raise it every year. And that payout happens per share that you own. So you might own 10 shares and you multiply that times the number of cents on the payout. That gives you how much you're going to make that year. You might own 100 shares or 1,000 shares or some other amount. But basically, there's a percent payout, an actual dollar value per share that you're going to get. And so that's one thing to know about the dividends. The payout schedule is something useful to know. Typically, companies pay out 4 times a year, once a quarter, and they have all kinds of different schedules. And there's a couple of dates to be aware of. The first one is called the announcement date. And sometimes that's tied in with the earnings call for a company. They will announce that in a certain amount of time, we're going to pay out our dividend and we're going to pay this number of cents per share on the dividend. And so the announcement date is the first thing to be aware of. Then the ex-dividend date is the next date to be aware of. And the ex-dividend date means the date after which you no longer are entitled to that dividend. So you have to own shares the day previous to the ex-dividend date in order to get the dividend. And so that's an important date. You've got to own your shares a day before the ex-dividend date to be entitled to the dividend. They have the record date, which is usually a couple days after the ex-dividend date, and that's where they record all of the shareholders and how many shares they own, and then those folks get the dividend. And the reason why the ex-dividend date is there is because it usually takes a couple days once you purchase shares of a stock for all the accounting to settle so that you actually own those shares. They're kind of in limbo for a couple days. So that's part of why you have to buy it one day before the ex-dividend date and a couple days after. They record, that's the record date, they record who owns that, who owns the shares, and then you get your dividend date. And then the next date is actually the pay date. And that's often like a couple weeks after the record date. It can change, everyone's different. But the pay date is when those funds actually show up in your account. And so those are kind of the main things to know. There's a declaration date, an ex-dividend date, a record date, and a pay date. And those things can all be looked up on Google for things. I work with Fidelity, and I really like one of their pages. It's very useful. If you are a member of Fidelity, if you go to your positions page, you get an overview of everything that you own. Kind of not in the top bar, a little below, but kind of in the top left of your position data. There's a pull down that gives you some different view options, and there is one called a dividend view. If you look for it, you can pull it down, dividend view, and I just love that because it shows every stock that you own, the number of shares, the day value of it, but it also shows the X date, I don't know about the record date, but the pay date, and it also shows what your yield is and how much they estimate you're going to make every year. And it's just a really useful page. So they make it really easy. I also have an account in Robinhood. There's not an easy way to find out what the payout is in Robinhood, but I have noticed that a couple weeks before you get a dividend, they start to kind of if you pull up an individual stock, they'll say, hey, you're going to get a dividend in a couple weeks or something. And so, it's not as technically savvy as Fidelity is, but that's Robinhood's method. Um, so I hope that kind of helps you guys. Um, I know some of it I kind of rambled a little bit, but these things are stuff that I understand really well, but trying to figure out how to teach it in a way that that you guys can get is, it's hit or miss, I guess. But you can Google search any of these terms if you want to know how does a dividend work. Google search it, or Chat GPT search it, or Grok search it, or whatever it is that you might choose, and you kind of get educated on it. I really like dividends. I love getting uh, what I would consider free money. I don't have to work for it at all. You just have to own the shares, and once you own the shares, the companies pay part of their income to you, and once you own enough of the shares, then the dividend payouts can be quite substantial, to the point where there's enough that you can live on them. Um, and I don't invest as much in technology as perhaps I should. The technology places pay kind of a small dividend in comparison to, say, an oil and gas stock, energy company, consumer staple stocks. So, I'm kind of entering that phase of my life where I have assets and I'm trying to create income to live off them. And so I really am using the dividends. But there's kind of a basic rundown of what a dividend is, some ideas of how to look it up. I use the Investors Business Daily site quite a bit. I really like their little graph that easily shows the yield and the PE ratio and all. It's useful information. So hopefully that helps. I guess in the comments, do you guys have other questions about dividends? Can I answer anything else for you? And hopefully on your own journey towards reaching financial independence, hoping to retire early, that this may be a help to you. Thanks a bunch. We'll see you.